Welcome to the GSMC Financial News Podcast, the show that delves into the ups and downs of the stock market, changes in the economy, and news from the worlds of real estate and technology. From breaking news on the New York Stock Exchange, NASDAQ, or the overseas market, to updates on the bond market, if there's money to be made, we've got you covered.
Hello, everyone. Welcome to the GSMC Financial News Podcast, brought to you by the GSMC Podcast Network. I'm your host, Virginia Lucci, and I'm coming at you live from my house in balmy Montgomery, Alabama. Today, we'll be covering the word on the street and what we're looking forward to this week on Wall Street. I'll give you the latest on the economic recovery with a focus on the hospitality industry. Then we're going to take a step back and go over some basics of the stock market. And if you stick around until the end, I'll give you my favorite cryptocurrency apps. Before we start the show today, I want to give you a little bit of a disclaimer. And this is the lawyer in me, so just bear with me. I'm not providing any legal or financial advice. This show is for entertainment purposes only, so don't come at me if something doesn't work out the way we expect it to. The economy is changing every second right now, and we don't know what's going to happen from one minute to the next. So, as always, if you have any questions, visit an attorney or financial professional who can give you advice tailored to your needs. All right, let's get to it. What is the word on the street this week? Stocks were mixed Monday at the opening bell. Stocks were mixed and gold surged to an all-time high amid a worsening relationship between the U.S. and China as Wall Street prepared for a week heavy on tech earnings reports and the Federal Reserve meeting that's set for Wednesday. The Dow Jones Industrial Average fell 28 points or 0.11% to 26,441. The S&P 500 was up 0.08%, and the NASDAQ gained 0.64%. The big news today is gold. Gold jumped to a record $1,944 an ounce as investors sought the safety of the precious metal as tensions between Washington and Beijing rise and as optimism over recovery from the coronavirus pandemic waned. Gold prices have actually gained 27% this year. Stocks have been impacted by the U.S.-China relationship. The American government, as we know, shut down the Chinese embassy in Houston last week. China countered by closing our embassy in Chengdu. I just watched our flags come down and the doors of the embassy locked. This is incredibly destabilizing, and it's dangerous to the U.S. China has become the administration's scapegoat for coronavirus. So China retaliated tit for tat. However, there is some optimism on the street. Pfizer and their subsidiary Moderna are in phase 3 trials, which means they're working with real people on their efficacy. This is fantastic news, and it's coming sooner than I ever anticipated. AstraZeneca is moving into phase 3 this month. Johnson & Johnson are beginning their vaccine trials and expect to move into their phase 3 by September. So in theory, analysts can see a vaccine on the horizon. Investors are also looking forward to the FOMC meeting later this week. We'll talk a little bit more in depth about that in a few minutes. And as you know, it's still earnings season, so we've got some very interesting things coming out this week. The S&P will report earnings that include the Dow Jones companies Pfizer, McDonald's, 3M, Visa, Chevron, and ExxonMobil. Tech giants reporting this week are going to be Apple, Amazon.com, Google parent Alphabet company, Advanced Micro Devices, Facebook, and PayPal. And we're going to talk a little bit more about the tech companies in a later segment, but these are going to be very interesting to watch. As we've seen, the cloud has really impacted everyday work performance, and there's been a rise in the usage of some tech apps. So this could be a positive thing, but as we also know, Goldman Sachs has indicated that Apple stocks may be at their all-time high, so may not be the best investment to make. So in other news this week, the Fed Reserve is meeting Wednesday afternoon. The Federal Open Market Committee, or FOMC, is meeting. So what is FOMC and why is this important? The FOMC is the group of federal officials given the sole authority in voting on whether to raise, lower, or maintain interest rates. The FOMC specifically is one of three branches within the Federal Reserve System, the first being FOMC, second being Board of Governors, and the third being the 12 regional reserve banks. Most notably, the FOMC decides what to do with the Fed's benchmark interest rate, the federal funds rate, which influences other borrowing costs throughout the financial system, such as credit card and home equity lines of credit rates, as well as yields on savings accounts and certificates of deposit. So this is really a very important meeting, especially given the state of our economy. The Fed officials are going to pay attention to the broader economic and financial market indicators when deciding what to do with interest rates. It's not a matter of what the stock market looks like today, what Apple earnings are going to be, or what is the latest bond information. This is really going to be closer to the word on the street. Specifically, officials have what's called a dual mandate, meaning two economic objectives. Their objectives are stable prices and maximum employment. Investors are so far pleased with the way the Fed has handled the COVID crisis. Their measures include liquidity injections on a massive scale, bringing interest rates down to zero, buying more than $2 trillion worth of treasuries and mortgage-backed securities, and implementing numerous credit easing programs in various markets. The stimulus on such a scale has given asset markets the confidence to effectively price in a, what they're calling, V-shaped recovery, with equities making back virtually all of their losses and corporate bond spreads narrowing in sharply as well. The quantitative easing has been incredibly helpful. For those who don't know, QE is a form of unconventional monetary policy in which a central bank purchases longer-term securities from the open market in order to increase the money supply and encourage lending and investment. But as we know, the recovery has not taken shape in the way we originally thought it would. I remember telling my stepdaughter back in March that she'd probably be able to go back to school before the semester was over. And how wrong am I? Because she's maybe going back on the 12th of August. We still don't know, and I'm not going to believe anything until we see that. But because of the continuing spikes in the virus numbers, we also have a reduction in unemployment benefits. We'll get into that later. But so investors are really eager to see what's going to happen this week. Markets are functioning well, but with longer dated yields remaining at such low levels, the Fed has little need to alter or change any of the language that it released in our prior months. Given this backdrop, particularly as we await the outcomes of negotiations over another fiscal stimulus, the Fed will retain their cautious language on the recovery and will leave Fed funds target rate unchanged at 0% or 0.25%, with no change to their QE stance. I believe, and it's been indicated, that the Fed funds target rate is going to remain at 0% to 0.25% for a very long time, really until they're confident that the economy has weathered the recent events and is back on track to achieve their maximum employment and price stability goals. Given the Fed's dot diagram that was released back in June, it only showed 2 FOMC members expecting the Fed to announce any increase in the policy rates before the end of 2022. So that's 2 full years that they're going to have such low interest rates. There's really little need for any further definitions or policy guidance right now. FOMC members that are at the meeting indicated that they would prefer future policy moves tied to inflation, while just a couple said they would rather unemployment be the guide. And I think it's really important for us to focus on the possibility of inflation. Usually in economic conditions that are similar to this, we end up with a significant inflation issue. And with world currencies being more regulated and more centralized, I think that it's very important for the Fed to focus on the possibility and the specter of inflation that has been kind of in the background this whole time. So the key takeaway from the press conference is going to be, or most likely going to be, Chairman Powell keeping up with this viewpoint, and we think it's going to be the same as his comments back in June. And it's really going to be a matter of sticking to the same interest rates until the public is confident that the disease is contained. But right now, a full recovery is not likely until that happens. Pretty obviously, interest rates are not going to be going anywhere for a very long time. Quantitative easing has been tapered to around $4 billion per day, officially $80 billion per month of the Treasury purchases versus $75 billion per day at the peak of the virus. We suspect that they'll retain the language that they will continue purchases at the current pace to sustain smooth market functioning, so we can foster an effective transmission of monetary policies to the broader financial conditions. The median GDP projection for 2020 was a contraction of 6.5%, followed by a 5% increase in 2021 and 3.5% of the following year. So, as always, there is a mixed bag in here. Fed Chairman Jay Powell has been cautious on the recovery. So, during this time, in addition to the lower interest rate, they've started up 2 more lending programs, one to buy more corporate bonds and the other to provide funding to small and medium-sized businesses. In our next segment, I'm going to talk a little bit more about the state of the economic recovery off the street and what's happening in real time to coincide with the Fed meeting and FOMC occurring this week. Other big news that we're anticipating this week is the big tech antitrust hearing before Congress. It's set to happen Wednesday. Originally, it was supposed to happen on Monday, but unfortunate passing of John Lewis has moved it to Wednesday. The hearing will have the CEOs of Amazon, Apple, Google, and Facebook to testify on their companies' claimed dominance in online spaces. It's actually the first time that all 4 executives will testify in one hearing. Of course, it's going to be virtual because of the pandemic, but it's going to be Jeff Bezos' first time testifying before Congress. So congratulations to him. They're all going to be appearing via video links. Among the 4 main companies, they're collectively worth $5 trillion. And we believe that they'll kind of get hit with a lot of different questions and statements from the House Judiciary Antitrust Subcommittee and investigate into their business practices. Senior subcommittee aides held a call with members of the media on Thursday of last week and outlined their planned approach. They have 1.3 million documents collected from the different companies and third-party sources. The subcommittee supposedly will be laser-focused on competition and whether current law can adequately keep their power in check. One line of questioning the aides mentioned will deal with the mountains of personal data collected and used by companies to build their formidable market share. As a Facebook user, I'm pretty sure that Zuckerberg knows absolutely everything there is to know about me. So sometimes it gets a little scary, and sometimes I don't want all my information to be out there. And I'll be thinking about putting new gutters on our house, and then next thing I know, I get an ad for gutters on my Facebook. That gets a little... A report based on the CEO's testimony is due later this year, maybe as early as summer. Since last June, the subcommittee has been investigating the dominance of a small number of digital platforms and the adequacy of existing antitrust laws and enforcement. Given the central role that these corporations play in the lives of American people, it's critical that their CEOs are forthcoming. Their testimony is essential to complete the investigation, according to House Judiciary Committee Chairman Jerry Nadler and Antitrust Subcommittee Chairman David Cicilline. So right now we're going to take a quick commercial break and stick around to the end of the show, and I will give you my top 10 cryptocurrency apps. Stay tuned.
Are you a business owner? Someone interested in the latest news that might affect your business? Then check out the GSMC Business News Podcast, a show dedicated to keeping you up to date on all things concerning business, technology, and the stock market. Get a head start on the day as we keep you updated on the latest goings-on Wall Street, money, jobs, and technology. The GSMC Business News Podcast has you covered.
Welcome back. As we've already discussed today, Wall Street had a mixed opening on Monday to start the week of July 27th. We're currently in the middle of an economic recovery, and the U.S. tallied over 1,000 coronavirus-related deaths Friday for the fourth straight day this week. Yet another sign of the alarming spike in COVID-19 cases across the country. There were over 1,000 cases on Friday alone, according to the COVID Tracking Project. 1,000 cases on Tuesday, over 1,000 cases on Wednesday, and 1,000 on Thursday. These are deaths. These are not people who are getting sick. These are people who were perfectly well in March before the virus pandemic hit. Over 137,000 people have died in the U.S., and over 4 million people have contracted the virus in the country since the outbreak. The alarming figures are largely driven by a surge in cases across the South and the West, particularly Arizona, California, Florida, and Texas. We may be heading for another lockdown as schools are opening. I really think that the opening of schools could be another super spreader situation. So what is the Trump administration doing? The White House's primary areas of focus, per a White House official, are back-to-work tax credits, which the official said is essentially a retention credit, extending unemployment insurance to 70% of a person's average wage before the COVID-19 process, and school funding. The extending the unemployment insurance to 70% of a person's average wage is a stark change from the $600 per week benefit unemployed Americans have been receiving up until this week. As far as schools are concerned, schools will get $105 billion. That would include roughly $70 billion for K through 12, but only half of that would be for all schools. The other half would only be for schools that are opening in person. And we're looking at a industry where teachers are having to buy supplies for their students. My concern is with the budgets that are as tight as they are, that some schools may have to skimp on some of the preventative measures. White House is also concerned about widespread liability insurance including for restaurants, hospitals, hotels, universities, and school districts that are attempting to make up for some of the lost wages. The White House economic advisor Larry Kudlow said Sunday that the next round of coronavirus relief will include a $1,200 stimulus payment to Americans. I don't know which Americans yet. And the Trump administration will lengthen the federal eviction moratorium. According to Kudlow, there is a $1,200 check coming. That's going to be part of the new package. When asked by CNN's Jake Tapper on State of the Union on Sunday. Republicans have finalized their relief bill worth about $1 trillion and will introduce it on Monday. As of the recording of this podcast, I'm not sure how that's going to turn out, but we can speculate. The legislation is set to provide temporary and reduced extension of unemployment benefits, another round of stimulus checks, liability protections for businesses, and funding to help schools restart. It will also include $16 billion in new funds for testing and tax incentives to encourage companies to rehire employees. So let's take a deeper dive into what's going on in the world of unemployment. The $600 weekly supplement to state unemployment checks that was imposed in March has ended over the weekend. Democrats want to extend the aid while Republicans are set to reduce the subsidy, arguing that extended aid is a disincentive for unemployed Americans to find work. Initially, that's exactly the purpose of the unemployment benefits, was that people could stay home, socially distance, and hope that the virus was a little bit better contained. According to Larry Kudlow, again, he said the administration's plan to cap unemployment benefits on approximately 70% the wage replacement is quite generous by any standard. Last week, Republicans were considering extending the insurance benefit at a reduced level of $400 per month or $100 a week throughout the rest of the year, which would be better than what the administration is offering, but not as great as what we've previously had. As negotiations continue, it's not yet clear when the potentially reduced unemployment supplement would go into effect. Right now, we don't have anything, so a little bit of something is better than nothing. The U.S. unemployment rate has surged to above 10% because of the pandemic, with nearly 32 million Americans now receiving unemployment benefits, according to the Labor Department. What we do know is if you're on unemployment because your job has been eliminated, you've been laid off, or just happen to find yourself without a job, your next unemployment check is going to be significantly lighter. And that's going to be a problem because people still have bills to pay. The GOP bill, which Senate Majority Leader Mitch McConnell plans to unroll on Monday, is expected to include everything but the broader $1 trillion package that contains other priorities as well, such as $25 billion for coronavirus testing, stimulus checks which would be doled out under the same guidelines as in the CARE Act, meaning Americans who make $75,000 or less would receive the full benefit. The GOP also wants to extend the Paycheck Protection Program, PPP, for small businesses with 300 or fewer employees that show a revenue loss of 50%. They will be able to apply for a second loan. McConnell thinks that we may have a new bill within 3 weeks. Democrats, on the other hand, including Speaker Pelosi, are looking for long-term situations, not quick fixes that will expire before the pandemic is over. I'd like to take this moment to really look at what's happening with evictions. So one thing that we didn't hear in any of those bills is what happens when Americans have a reduced unemployment check and are unable to make their rent or mortgage payments. I've been talking about this for a couple episodes because I think it's a very dooming prospect. And could increase homelessness significantly over the country. One of the 11 million Americans living in rental households, 20% are at risk of eviction by September 30th. 20%. That means 20% of people who are renting right now will not be able to afford their housing as of September. African American and Hispanic renters are expected to be hit the hardest. So what do we do now? What can Americans who find themselves at risk of losing their housing do right now? First thing you should do is talk to your landlord. Housing advocates and property owners agree that this is really your best first step. Landlords are typically more willing to negotiate with tenants who reach out quickly rather than those who hunker down and stay quiet, they say. A lot of landlords are willing to work with people in this situation. They would rather keep a tenant who can pay less than try to get someone new in their houses. So, is there a real possibility of people being evicted? Absolutely. Congress passed the national moratorium that shielded about 1/3 of renters from eviction since late March. The renters protected under this moratorium live in buildings or home with a mortgage that has some sort of government backing. That moratorium expires on Friday. So renters really don't have a lot of time to make provisions. Once the ban ends, listen closely to this. This is very important. Landlords are required to give tenants 30 days notice before filing an eviction complaint in court. That means an eviction paperwork won't be filed until late August at the very earliest. Some renters are also covered by a patchwork of state and local eviction bans that don't end until August or September. So find out for your particular state where you're living if the rules are different and you have a little bit more time. Renters should contact local housing groups and tenant rights organizations to determine whether they are covered by the local moratorium. So now that we've had this moratorium, people may not have been paying their rent for 2 or 3 months. What happens? Each renter is responsible for the rent that they've missed. Just because there was a moratorium on the rent doesn't mean that the debt did not incur. However, depending on the type of moratorium, landlords may be prevented from charging late fees or other penalties on that. So there's a little bit of light at the end of the tunnel, but at the same time, that may be a large sum of money that renters will have to come up with at once to stay in their homes. There's a pandemic, so what happens in court? Right now, most jurisdictions here in Alabama are still having hearings via video conference. So it's not like the court system is actually closed right now. It's just more online. So eviction courts are still going on in some parts of the country. Some are actually holding in-person hearings and attempting to maintain social distancing within the courtrooms. I've been in a lot of courtrooms in my life, and there are very, very few courtrooms that can really maintain social distancing. So I would pretty much bet that most courtrooms are going to be virtual, but that doesn't mean that the judge has any less authority over you if you are attending a virtual hearing or an in-person hearing. The biggest advice here, well, not advice because I don't give advice, but the most important thing I'm going to say here is if you get a notice of eviction, that does not mean that you have to leave your house immediately. That does not mean that your landlord can put all of your belongings on the front yard and lock you out of your house. Things have to go through the proper judicial steps. First step is to give you notice of an eviction. Second step is to file the eviction. Third step is for you to have a court hearing. And at a lot of these court hearings, judges are giving renters accommodations, giving them time to come up with the back payments, and maybe setting the case off for 30 days or more. Again, this is not legal advice. And if you have any specific questions for your situation, please see an attorney. A lot of attorneys, especially these days, will give out a free consultation. If not, usually consultation fees are a fraction of an hourly rate. So please take the opportunity to visit an attorney if you have any specific questions. So with that great news, kind of have more bad news. Museums are suffering as well. 33% of the American museums are at a significant risk of closing permanently by next fall due to economic distress from coronavirus-related shutdowns. Ticket and gift shop sales, school trips, and museum events are the primary source of funding, and none of that's been happening. So the 760 museums surveyed included aquariums, botanical gardens, art museums, and science centers. More than 40% surveyed were history museums, historic houses, and historical societies. 87% said they had 12 months or less financial operating in reserves. 56% they had resources to cover less than 6 months of their operation. So that would be really unfortunate to lose museums. Restaurants are also suffering. U.S. restaurant bookings reflect continued uncertainty over reopening and closing measures and data from OpenTable. Multiple states have enacted mask orders, and some have enacted last calls, group size limits, and curfews for bars and restaurants meant to stop large gatherings at these businesses. I still have not figured out how to eat with a mask on, so I have been reluctant to actually go into a restaurant myself. So the numbers aren't surprising to me. The year after year report from OpenTable has shown a significant decrease in reservations. We have a small restaurant chain in Montgomery called Chappie's. They have great breakfasts and deli sandwiches, and it's just a nice little place that's local. And at the beginning of the pandemic, my husband and I spoke with the owner, and he said that he was struggling and paying out of pocket for servers and for his cooks, and they were smart enough to actually install kind of like a drive-in restaurant. So the servers will come out to your car like car hops. Now, this is great, but the servers ended up with significantly fewer hours working, and their tips were really, really affected by this. So, and, I know that Chappie's struggled, and they're continuing to struggle. So, really, if you have the opportunity this week, eat at a local restaurant. Really, this is only going to get worse as the pandemic rages. Independent restaurants and larger chains have applied for government assistance and PPP loans. But, again, it may not be enough to save small businesses. And if this continues, we're going to end up in a sea of chain restaurants and big box stores. So please visit your local restaurants. On that note, we are going to take a quick break. And if you stick around for the fundamentals of the stock market in our next segment, and if you stay until the end, you're going to hear my top 10 cryptocurrency apps. You'll be glad you did if I can say cryptocurrency in the next segment. We'll be right back.
Tired of searching the vast jungle of podcasts? Now listen close and hear this out. There's a podcast network that covers just about everything that you've been searching. Hey! The Golden State Media Concepts Podcast Network is here. Nothing less than a podcast bliss with endless hours of podcast coverage. From news, sports, music, fashion, cooking, entertainment, fantasy, football, and so much more. So stop lurking around and go straight out to the Golden State Media Concepts Podcast Network. Guaranteed to fill that podcast itch. whatever it may be. Visit us at www.gsmcpodcast.com. Follow us on Facebook and Twitter, and download us on iTunes, SoundCloud, and Google Play.
Welcome back to the GSMC Financial News Podcast, brought to you by the GSMC Podcast Network. Before the break, we talked about the recovery in unemployment. In this next segment, we're going to take a little bit of a step back. Some of you have asked for a fundamental review of the stock market. So today, we're going to slow down for a few minutes and go over the basics. I want all of my listeners to have all the information that they need to become savvy investors and super savers. There are some things that you're really not born knowing, and the way the stock market works is one of those things. So, you've heard me use the term Wall Street as kind of a generic term. It's not just a street in Lower Manhattan. It actually is a conglomerate. It includes the stock market, the bond market, commodities market, futures market, and foreign exchange market. The original purpose of the securities market was to raise funds for companies to grow, to be profitable, and to create jobs. So what does the market buy and sell? Well, a market can exist for anything. There's probably a trader somewhere trading on it. But the main thing that people on Wall Street work with are contracts. A contract is just a promise to do something. You have offer, acceptance, and there you go. This allows people to trade all sorts of things without dealing with physical details of a transaction. So here are just a couple examples. First of all, you have stocks. Stock is a contract representing a partial ownership of a corporation. You own a piece of the company and usually have a very small say, usually, in how it's run via your voting rights. Bonds. Bonds are essentially a loan that can be bought and sold by its creditors. When the government wants to borrow money from the population, it issues bonds. It sells some number of contracts for X amount, promising to pay X plus Y in 10, 20, 30 years from now. The original person to buy a bond can sell it to somebody else later on. 10 years from now, the government will pay whoever owns the bond, not the person who originally bought it. My grandparents bought me bonds for any occasion when I was a kid. And I'm still finding bonds that my grandmother purchased for me, and she passed away in the mid-'80s. So a lot of people like to purchase bonds because it's a guaranteed return. You know you're going to make up face value and then get some. So it's a nice little thing that you can do for grandkids or just to put some money in savings in a really secure way. Problem is you got to hold on to the bonds. Futures are future promise to buy or sell something in the future at a price that's set now. So traders are really just like merchants. They buy something from one person and sell it to another person. So what is the stock market? The stock market is just one type of financial market. Financial markets are made by buying and selling numerous types of financial instruments, including equities, bonds, currencies, and derivatives. Financial markets rely heavily on information and transparency to ensure that the markets set prices that are efficient and appropriate. The market prices of securities may not be indicative of their intrinsic value, because of macroeconomic forces like taxes. Some financial markets are small with little activity, and others, like the New York Stock Exchange, are much larger. So let's go into what these exchanges are. The leading stock exchange in the U.S. is the New York Stock Exchange. There's also NASDAQ, the Chicago Board Options Exchange, and foreign markets. These leading national exchanges, along with several other exchanges operating in the country, form the stock markets of the U.S. They trade billions of dollars of securities daily. The equities market is a financial market that enables investors to buy and sell shares of publicly traded companies. The primary stock market is where new issues of stocks, called initial public offerings or IPOs, are sold. Any subsequent trading of stock occurs in the secondary market, where investors buy and sell securities they already own. Prices of securities traded in the financial markets may not necessarily reflect the true nature of their intrinsic value, rather. So there are different types of financial markets, like we said. New York Stock Exchange, for example, is located on Wall Street in New York. It's also known as the Big Board. This is where many of the oldest publicly traded U.S. companies are listed. The Intercontinental Exchange now owns the New York Stock Exchange, having purchased the exchange in 2013. It's made up of 21 rooms that are used to facilitate trading. The main building is located on 18 Broad Street, and there's one at 11 Wall Street in Lower Manhattan. They were both designated as historical landmarks in 1978. The New York Stock Exchange is the world's largest exchange by market capitalization, estimated to be $28.5 trillion as of June of 2018. So maybe a little different now, but for years, the New York Stock Exchange relied on floor trading using the open outcry system. I don't know if you've seen these old movies where it looks like people are yelling and screaming at each other and nobody's really paying attention. It's like, I don't know if any of y'all have been to a Waffle House where the server will stand at the front of the grill and yell out the orders. It looks a lot like that, and it looks just as complicated. So whether you want your stock scattered, covered, or smothered, the New York Stock Exchange on the floor is where you found it. But now they've gone to a electronic system, but there are still floor traders there who set the volume and pricing and deal in all this volume, and it's still crazy. So the NASDAQ is the tech-heavy market where technology and biotech giants like Apple, Google, Microsoft, Oracle, Amazon, and Intel live. They're also headquartered in New York. NASDAQ OMX operates 25 markets, primarily equities, and also including options, fixed incomes, derivatives, and commodities, as well as one clearinghouse and 5 central securities depositories in the U.S. and Europe. Its cutting-edge trading technology is used by 70 exchanges in 50 countries. It's listed under the NASDAQ under the symbol NDAQ and has been part of the S&P 500 since 2008. The NASDAQ computerized trading system was initially designed as an alternative to the inefficient specialist system, which had been prevalent in the country for almost a century. The rapid evolution of technology has made NASDAQ's electronic trading model the standard worldwide. The other exchange I want to really look at is the Chicago Board Options Exchange, founded in 1973. It is the world's largest options market, with contracts focusing on individual equities, indexes, and interest rates. In 2010, the company converted to a publicly traded corporation and rebranded as Cboe Global Markets Inc., CBOE. Traders refer to the exchange as Cboe now, and is the holding company, and the exchange is a primary asset. Cboe is also the originator of the Volatility Index, VIX, which is the most widely used and recognized proxy for market volatility. Cboe offers trading across multiple asset classes and geographies, including options futures, U.S. and European equities, exchange-traded products, ETPs, global foreign exchange, FX, and multi-asset volatility products. It is the largest options exchange in the U.S. and the largest stock exchange in Europe by value traded. It is the second largest stock exchange operator in the U.S. and a top global market for ETP trading. Over-the-counter markets are a different animal completely. It is a decentralized market, meaning it doesn't have any physical locations, and trading is conducted electronically. Market participants trade securities directly between two parties without a broker. An OTC market handles the exchange of publicly traded stocks that are not listed on the New York Stock Exchange, NASDAQ, or the American Stock Exchange. In general, companies that trade on OTC markets are smaller than those on the primary markets, as OTC markets require less regulation and cost a lot less to use. So we've already kind of talked about the bond market, but a bond is a security in which an investor loans money for a defined period at a pre-established rate. Bonds are issued by corporations as well as by municipalities, states, and sovereign governments to finance projects and operations. So you're just giving somebody just a little bit of money. They're going to pay it back to you with interest. The bond market sells securities such as notes and bills issued by the U.S. Treasury. For example, the bond market is also called the debt, credit, or fixed income markets. Finally, we have money markets. Money markets are typically trade in products with highly liquid short-term maturities of less than a year and are characterized by a high degree of safety and a relatively low return in interest. This is really where you find your risk-averse investors. At the wholesale level, the money markets involve large volume trades between institutions and traders. At the retail level, they include money market mutual funds brought by individual investors and money market accounts opened by bank customers. Individuals may also invest in the money markets by buying short-term certificates of deposits or CDs, municipal notes, or U.S. Treasury bills, among examples. We're going to take a look at a derivative market. A derivative market is a contract between two or more parties whose value is based on an agreed-upon underlying asset, like a security, or a set of assets like an index. Derivatives are secondary securities whose value is solely derived from the value of the primary security that they are linked to. So, in and of itself, the derivative is worthless. Rather than trading stocks directly, a derivative market trades in futures and options contracts and other advanced financial products that derive their value from the underlying instrument like bonds, commodities, currencies, interest rates, market indexes, and stocks. We also have a Forex market. The Forex market means a foreign exchange market where you can buy, sell, exchange, and speculate on currencies. So that's kind of fun. That makes the Forex market the most liquid in the world. Cash is really the definition of a liquid asset. Currency market handles more than $5 trillion in a daily transaction, which is more than futures and equity markets combined. As with the OTC markets, the Forex market is also decentralized and consists of a global network of computers and brokers from around the world. The Forex market is made up of banks, commercial companies, central banks, investment management firms, hedge funds, and retail Forex brokers and investors. So that's a lot of markets and gets a little complicated, but really, how does the market work? In a nutshell, stock markets provide a secure market regulated by the SEC, also known as the Securities and Exchange Commission. The stock exchange makes sure there is price transparency and liquidity, price discovery, and fair dealings and activities. So that means that a stock is the same price for you as it is for me. Almost all major stock markets across the globe operate electronically. The exchange maintains trading systems that efficiently manage the buy and sell orders from various participants. They perform the price matching function to facilitate trade execution at a price fair to both the buyers and sellers. This is where you see your initial public offerings, which allows companies to really get the money that they need to continue. And then they can sell additional shares through other offerings at a later stage if they need additional money, or they may even buy back or delist some of their shares. The stock market facilitates such transaction. So I hope this kind of untangles the knots of the stock market. Come at me on Twitter and let me know if you found this useful or if there are any other basics you want to go over. I'm glad to do that. And because, again, I want to make sure that my listeners are really knowledgeable about the stock market and can make the best decisions they can. So right now we're going to take another short commercial break. Please stay around because after the break, I am going to give you my top 10 cryptocurrency apps. Stick around.
Do you work in the world of marketing and advertising? Are you a media buyer or the owner of an agency? Have you been looking for a podcast to help stay on top of all the goings on of those worlds? The GSMC Marketing News Podcast is dedicated to keeping you up to date on all things concerning marketing and advertising. Get the latest marketing news, from what major businesses have planned for the coming year to the newest trends in advertising, from podcasts, digital and streaming to the old standbys of radio, television, and billboards. The GSMC Marketing News Podcast has you covered, whether you're a marketing agent or a business trying to expand your brand.
All right, welcome back. In this last segment, we are going to talk about my top 10 cryptocurrency apps. If you are like me, then you may not know what a cryptocurrency even is. So let's start off with the basics. Cryptocurrencies are also known as DeFi or digital financing. It's a digital or virtual currency that is secured by cryptography, which makes it nearly impossible to counterfeit or double spend. Many cryptocurrencies are decentralized networks based on blockchain technology, distributed ledger enforced by a disparate network of computers. So if that makes any sense, a defining feature of cryptocurrencies is that they are generally not issued by any central authority, rendering them theoretically immune to government interference or manipulation. People actually mine coin in their own homes from their own personal computers. It's extrajudicial, so there's no SEC or regulatory commission. So it's kind of crowdsourced, if you will. The first blockchain-based cryptocurrency was Bitcoin, which I'm sure is probably the most popular and is still the most valuable. Today, there are thousands of alternate cryptocurrencies with various functions and specifications. Some of these are clones or forks of Bitcoin, while others are new currencies that were built from scratch. Some of the competing cryptocurrencies were spawned by Bitcoin's success. They're known as altcoins, and this includes Litecoin, Purecoin, and Namecoin, as well as Ethereum, Cardano, and EOS. So today, the aggregate value, which value is in air quotes, but you can't see me, of cryptocurrencies that are in existence today is around 214 billion. Bitcoin represents more than 68% of the total value. Cryptocurrencies hold the promise of making it easier to transfer funds directly between two parties without the need for a trusted third party like a bank or a credit card company. The transfers are instead secured by the use of public keys and private keys and different forms of incentive systems like proof of work or proof of stake. In modern cryptocurrency systems, a user's wallet or account address has a public key, while the private key is only known to the owner and is used to sign transactions. Fund transfers are completed with minimal processing fees, allowing users to avoid steep fees charged by banks and financial institutions for wire transfers. So that sounds great, right? You've got free flow of money between people and sounds like everything's great, right? Well, it's not all rosy. You know, it's semi-anonymous, so it leaves you open to a lot of illegal activities such as money laundering, tax evasion. But cryptocurrency advocates are often highly value their anonymity, citing the benefits of privacy like protection for whistleblowers or activists living under repressive governments. Some cryptocurrencies are actually more private than others. Whether you are a crypto newbie like me, an entrepreneur, an experienced trader, or a business owner, there is something for everyone as far as crypto apps are concerned. Crypto investors are always looking for the next best app that will make trading and storing their digital assets easier. Many apps in the crypto world can serve for several purposes, making it easy for crypto investors to manage their digital assets. These apps will specialize in various aspects such as exchanges, wallets, news, portfolios, games, and more. So let's get at it. Number 10 is Ocane. This crypto wallet has a tidy and easy user interface that offers an all-in-one crypto solution for individuals and businesses at all times. Ocane is built for everyone, whether you are a beginner or an experienced crypto trader. It allows you to pay, receive, withdraw, and deposit, and view your crypto updates in real time. The app allows users to gain access to CoinMarketCap to view ratings and prices. The app also supports Bitcoin, Winco, Ethereum, and other major digital currencies. The easy-to-use application has a feature that allows businesses to receive cryptocurrency as a method of payment. Number 9 is Binance. Binance is one of the world's fastest-growing cryptocurrency exchange platforms in terms of the volume of transactions at the moment. The app is currently available in over 190 countries, offering a large number of cryptocurrency markets. It's popular among professional traders due to its stock trading style. It's also important to note that the app is extremely easy to use and straightforward, and beginner crypto traders can learn to use it almost immediately. Number 8 is Coinbase. Coinbase is considered the easiest cryptocurrency exchange platform in the crypto world today. The app is user-friendly, and it's best for beginners who are new to the cryptocurrency market. This digital currency exchange app makes it easy to buy, sell, and store your digital currencies, making it the perfect platform for those who are learning to trade their digital assets. There's also a Coinbase Pro, which has a little bit more information and gives you an added layer of security. So a lot of people like the Coinbase Pro. Costs a little bit more, but you get what you pay for. So number 7 is the Blockfolio app. Blockfolio is a crypto app that helps you organize your crypto portfolio and track your market performance and trading. The app currently supports more than 2,500 different cryptocurrencies, and it offers important details and easy to understand charts. And if you're a listener to this podcast, you know how I like my charts. Number 6, cryptocurrency converter and calculator. This is an important app for both beginners and pro traders who are looking for an easy way to convert selected currencies. The app is fast and powerful and is easy to use. The best part is that the app remains functional even without an internet connection, which means that even when you're in a remote area, you can still use the app. The app supports over 29 major crypto markets. So that sounds pretty interesting for people who may not be in the United States. I think that's really where you're going to get the best use of that app. Number 5 is Robinhood. We looked at Robinhood last time as one of my favorite investing apps. So its main function is letting you buy and sell stock on your own without fees. However, the app does let you buy, sell, trade, and keep track of cryptocurrencies such as Bitcoin, Dogecoin, Ethereum, and many others. It is an excellent all-in-one solution for people who want to invest in the stock market and also use cryptocurrency. Robinhood is one of my favorite apps for that reason. It's incredibly versatile, gives you a lot of information, and really delivers it. Number 4 is Delta. The price is free, or you can get an upgraded Pro for $8.49 a month or for $49.99 a year. Delta is actually one of the newer cryptocurrency apps, comparatively speaking. It's a portfolio tracker app with a library of over 3,000 cryptocurrencies, a full watch list and market data, and even price alerts. It also comes with support for Coinbase, Bittrex, KuCoin, and GDAX, and other wallet apps for easy and quick syncing. Honestly, this app has more features than any of the other apps we're going to talk about, but you do have to pay the cost of $8.49 per month or $49.99. I'm not really a fan of subscriptions because I inevitably forget that I have them, like the Pilates app that I haven't used in a month. But if you are super hardcore into cryptocurrencies and you're looking at your stuff on a daily basis, it's worth the extra money to actually have this. Number 3 is investing.com. Investing.com cryptocurrency. This is one of the investing big boys. Investing.com has been around for more than 10 years, offering advice on everything about investments. So it would make sense that they have their own cryptocurrency app as well. This app doesn't really have the wallet functionality that we discussed in Delta or some of the other apps, but it's helpful in that it has the most comprehensive database for tracking the prices of 1,300 altcoins. It has real-time and historical price tracking and a full portfolio that allows you to quickly and easily track how much money you might have made or lost. So it gives you alerts if you want to sell at a certain price, or you can sell quickly when the time comes. Number 2 is Nexo. Nexo is blockchain-based cryptocurrency-backed loan system created by European fintech company Credissimo. Users deposit supported cryptocurrency coins and tokens into a Nexo wallet, virtually of course, and receive an instant cash loan in either US dollars or euros. Loan details are established by Nexo Oracle and stored in an Ethereum smart contract. The Nexos token is taken to an ERC20 interest-bearing security token, which the company markets as SEC compliant. So this is really what I would look at as a legitimizing factor, allowing you to actually use real money. The number one app that I have on my list today is CoinTracker. In a nutshell, CoinTracker is an online portal that gives you real-time access to your cryptocurrency portfolio. That is to say that the platform allows you to connect third-party exchanges and wallets with the view of giving you second-by-second updates on the value of your investment. Not only does this allow you to check your balances in real time, but you can also keep tabs on transactions. This is especially useful if you're a full-time trader and you want to automate your reconciliation process. It's also useful if you live in a country that taxes cryptocurrency profits as capital gains. This is actually the app that my husband has used. It made tax season really easy because he has currency across a number of blocks, and all we had to do is get this report from this app, bring it to our accountant, and they were able to complete our taxes. So I'm going to put a little disclaimer on this. Again, my normal disclaimer, this isn't legal or financial advice, but as you can probably tell, I'm not that well versed in the crypto area. So a lot of this information is coming from my husband, who is a big crypto person. My husband really likes to mine and buy and trade cryptos. So this is actually coming from someone I think is a good authority on crypto coins. So please take that as it will. So I think it's pretty good advice. The crypto world is really interesting, and honestly, I cannot believe how many cryptocurrencies there are. It seems crazy to me. Well, that's the end of our show, folks, and I thank you for joining me today on the GSMC Financial News Podcast. If you could, please find us on your favorite podcast app and give us a 5-star review, because that'll really help us. And find me on Twitter at GSMC Financial Podcast. Let me know if you've got any questions or concerns, or if you've got something you really want me to cover. In the next week, we are going to be looking at our first in-air series of financial crimes. So I think that's going to be pretty intriguing. And we're going to also have an update on the recovery and an update on the big tech in front of Congress. So join us next time on the GSMC Financial News Podcast. And until then, stay safe, everyone, and wear your masks.
You've been listening to the GSMC Financial News Podcast, part of the GSMC Podcast Network. You can find this show and others like it at www.gsmcpodcast.com. Download our podcasts on Apple Podcasts, Stitcher, SoundCloud, and Google Play. Just type GSMC into your favorite podcast app to find all of the shows from the GSMC Podcast Network. From movies to music, from sports to entertainment, from business news to weird news. Please subscribe to the podcast and follow us on Twitter and Facebook. Thank you, and we hope you've enjoyed today's podcast.